Hey everyone, welcome back to this Grow 90 courseX program. I'm Jodash, I'm a final year undergraduate at IIT Madras, and in today's video I'll explain you about Japanese candlestick. Have you ever wondered what are those charts that traders looks into before executing any trade? So you might be confused, like, right? So in this video I'll clear out all your confusion regarding that Japanese candlestick. So yeah, as per the Wikipedia definitions, here you can see a candlestick chart, also called as Japanese candlestick, is a style of financial chart used to describe price movement of a security derivative or currency. Each candlestick typically shows one day, thus a 1 month chart shows 20 trading days as 20 candlesticks. Alright, so this is a Japanese candlestick. As you can see here, this is a Japanese candlestick, and if you look into your Upstock account or your trading account and you go to the chart section, and if you open it as a candlestick diagram, then you will see something like this. All right, so this is a Japanese candlestick diagram. This is taken from Upstock's uh, charts. So yeah, so here you can see, you can set the candlestick duration. You can set it by clicking on this. So I have set it a 1 minute duration. All right, you can set it 1 hour, 1 day, anything you as per your wish. All right, just go to the Upstock account or any Zerodha account, go to the chart section, click on the instrument is basically the index or companies. All right, so if you want to see the Japanese candlestick of Tata or SBI, click on the Tata and open the chart. All right, and after opening the chart, select this is the selecting of the chart type. All right, let me clear it out. So here you can select the chart type. Okay, so you can select the chart type and click the Japanese candlestick style. All right, so after selecting the Japanese candlestick style, you can click on 1 minute. Okay, and select it whatever duration you want, whether it is 1 minute, 1 hour, or like you can set it as a day also. Generally people used to use it as a 1 day candlestick, but for intraday and all you will use 1 minute candlestick. All right, so there are two types of candlestick as per you can see here. As you can see here, that you have this bearish candlestick. Okay, you have this bearish, this is known as bearish, where the sellers are in control, where the price goes down. All right, so this is a bearish candlestick. Okay, and this is a bullish candlestick, where the buyers are in control and the prices goes up. If you don't know about the bear and a bull, I have explained in the last video. Just go and watch that video. All right, so this is a candlestick and you might be confused by looking into this. So by watching this video, all your confusion will be over. All right, so without any further ado, let's get into it. So this is a typically candlestick diagram. All right, so here you can see that in the last video I have explained what is open, high, low, close of a instrument. Okay, what is a open, high, low, close chart? Okay, where this is the open price. Okay, this is the lowest price of that stock, and this is the highest price, and this is the close price, and this is duration of 1 minute. Let's consider 1 minute duration. Okay, 1 minute duration. So during that duration, the highest price was this, lowest price was this, open price was this, and the close price was this. Then if you want to draw the same thing in a Japanese candlestick style, then this is the open this is the okay, so yeah, this is the open price. Okay, so this is the open price and this is the close price. Now the lowest price is this and the highest price is this. So this is a Japanese candlestick representation of an open, high, low, close of a price. Okay, price of a instrument. Now there are two type of candle, bullish candle and the bearish candle. All right, so you can see here, where in the bearish candle the open price is this and the close price is this, while the highest and the lowest price are the same. Why? Because you can see here that in the bullish candle the market opens at this price, so this is the open price. this is O, this is C. Okay, so for that, and it is like similar to the bullish candle, the O will be here and the C will be on top because the price goes up, but in this case the price goes down. All right, so yeah, these are the two candles. Now we'll understand what are the different parts of this candle. So yeah, as you can see, it has two major parts. One is wick. The small thin part is known as a wick. Okay, you have two wicks in a candle, or you can have two or one single, whatever, according to the market. So these thin parts are known as the wick, and the fat part are known as body. So this is the body, and this is the small thin part, not the wicks. All right, so yeah, now we'll understand what are the different types of candlestick that can be formed in a market scenario. So yeah, uh, the first thing that we'll see is a big body and a small wick. So in this candlestick, you can see there is a price rejection going on. Okay, this price rejection is very small. Okay, because the wick is small. What is price rejection? Rejection is that someone comes and buys, someone comes and uh, does the trade on a higher price, okay, in this price, but the market doesn't likes that price, so it pulls it down to this part. All right, so this is the price rejection. Someone is putting a price, but market is rejecting it. So it has a smaller price rejection because the wick is small, and it has a strong buyers effect. So because the body is high, body is big. Similarly, we have a strong price rejection because the wick is very large, but the buyers are weak because the body is weak. Okay, so this means that the price will go up because buyers are in control, and this means the price will go down because bearish, it is a bearish candle, and the sellers are in will be in control in the next candlestick. Similar thing applies to the bullish candle, sorry, the red candles. Okay, here the strong buyer and weak price rejection. All right, bearish bar. Here one of the trader comes and puts and brings the price down, but the market again pulls the price up and keeps the close price near to the open price. So that's what I mean. This here you can see strong price rejection is going on, and the seller are weak. Okay, so that's why this is a bullish candle. So don't just look into the candle color and tell that this is a bullish candle or this is a bearish candle. This is red, although this is red, this is a bullish candle. Although this is a green, this is a bearish candle. All right, so color doesn't say whether it is a bullish or bearish candle. Okay, so in this scenario, the buyers are in sorry, in these scenarios the sellers are in control, and in this scenario the price is rejected strongly by the buyers. All right, so yeah, these are the two major types of candlesticks. Okay, now you can see that this is another type of candlestick where you can see there is a very small body and you have two wicks. Okay, these are the two wicks. So when these bodies are small, this means there is a decision going on in the market, or the market still hasn't decided whether it will go up or down. So after this, if it goes similar to this, okay, then the market is still deciding, and after that it will go up or down. Okay, so this is known as the decision period, and this candlestick is known as the market is in decision. Now we have the same thing I have explained in the last diagram. It has a big body, small wick, buyers in control, bullish candle. It has a small body, big wick, sellers are in control, so that is a bearish candle. Similarly, we have big body, small wick, sellers are in control, and it's a bearish bar. Okay, and it's a small body, big wick, buyers are in control, bullish candle. So these are the four major types of candle you can see in the marketplace, Okay, so just summarizing the summarizing whatever I explained in the last diagram, let me explain it once again. So if it is a one day candlesticks, this is a one day candlestick, then the open price will be this. Okay, this is the open price and this is the close price. Okay, and this is the high price. This chart is known as OHLC chart. This is known as the candlestick chart. Okay, so traders generally combine 3-4 candlestick, and they also combine this with some area chart and some trend chart, and then they do the trading. Not only they watch, they don't do the trading by looking into the candlestick. They do trading by looking into some 2-3 more other factors, and then they do the trading. So yeah, we'll also understand how do you combine the candlestick. So for that we have a simple rule that is put them together. What is combining of candlestick? Basically, if you have two candlestick, okay, now you want to make it one. How do you make it one? Just combine it. How do you combine it? We have a rule. Okay, so if the candlestick are both of them are of same type, that is green, all right, both of them are a green candlestick, then just add them both. Okay, just take the union of both the candlestick. Okay, okay, so yeah, so that's what it is. Let me show you an example. Here you can see both the candlestick of are of same type, so I'm taking the union of both the candlestick. All right, similarly we have put them together and subtract smaller body from the bigger one only if both the candlestick are of different types. In this case you can see that both the candlestick are of different type. I'm taking both of them together and then subtracting the smaller one, and I will get the uh, combined candlestick. All right, so yeah, and how to find out the max high and low is taking the max of high and the mean of low. So just add the this is the max of high. Okay, among these two, this is the max of high, and among these two, this is the low. So that's why the lowest part is coming here. Okay, so that's how you get the high low, and you also get the body of that candlestick. All right, so we'll see one example. Here you can see 1 minute bar is there and 1 minute red bar is there. Now we'll combine them. Since these both of them are different, we'll combine them and subtract this part. After subtracting whatever we will get, this will be the combined candlestick. Okay, so this is the combining of candlestick. Once again, summarizing it, in order to combine the candlestick, you have to take both of the candlestick together. Okay, in case it is both of the same type, then you have to take the summation, or you have to take the union of both the candlestick, as it is shown in the this diagram. Here both of them are together, so I am taking both together and then I am adding it up. So this is the combined candlestick. Now if both of them are different, just take the subtraction, or just take the subtraction from the bigger body to the smaller body. That is, take the body and subtract the smaller body, and you will get the combined candlestick. Here in this case I have subtracted the smaller body and you got this candlestick. And in order to get the high and low, you take the maximum of high. This is the maximum of high among these two. Okay, among these two, this is the maximum of high. So take the maximum of high and minimum of low among these two. This is the minimum, right? As you can see the position. All right, so this is the minimum. We are taking the low of this. So that's how you combine a candlestick. Now you know how to combine a candlestick, and you also know what are the different types of candlestick. Okay, so you will understand by looking in the chart what are this candlestick shows. All right, so you can see in this chart that this candlestick shows that the price opened at the here and it closed at here. Okay, the maximum was this and the minimum was somewhere, this was the minimum. Okay, you can see on this. Now you can combine these two. Okay, just delete the smaller part. If you combine these two, it will be something like this. All right, so now you can go and watch into the upstock chart diagram and you will understand what are those candlesticks showing. Okay, Okay, you will understand where the market is heading towards. It is going up or down, uh, and also you will understand what will be the future market price. Okay, so now you know how the candlestick pattern works. Now don't just go immediately and start trading, because there is one more thing that you need to know is the TAE framework, the trigger area and entry. So where you will be combining 2-3 more factors, that is the trend line, and the second one is area, and the third one is entry trigger. All right, so in future, in the next video I'll explain about this. Okay, and after that you might go and start trading. All right, so cool, then bye, see you.